Hey, I'm Juan. Thank you for joining me. Today I'm going to react to Strongman Finance. I've been watching this guy. He's really animated, has a lot of good information under all the antics. Today we're just going to react to one of his videos. If you don't know me, I'm Juan. I've been day trading and investing for over a decade, working upper management, went back to school to become a financial analyst, and I'm here to make investing and trading easy for you. First, how can you not react to a title like this? My rectum is in taters, BABA stock, JD stock, 10-cent stock, all Chinese stocks are going to zero. That's a great title. So let's watch Mr. Strongman Finance.
Hope I didn't freeze my camera with that. Welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term bogle-headed investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. Links in the description. And I'm a little confused about what's going on with my Baba. Now, as we all know, I've been getting a lot of freaking hate because I have had my cheeks clapped on Alibaba stock. As a matter of fact, I'm going to show you right now what my total return is.
As you can see, he's extremely animated, very funny, very entertaining. I think that's his personality. I'm just assuming here, but it's hard to fake that. So if he's like that in real life and that's how he's genuinely, then kudos, I respect that. It's definitely funny. It's fun to watch. But with that, he still has a lot of great information to share.
Are you ready for this? So apparently, actually, I'm down 54.61%. 7% in one day. I've lost a total of $3,479.02. I'm a moron, everybody. Woo! Now, a lot of y'all are laughing at me, and you're comparing me to Jeremy LaFufu, which I think is hilarious, but that's okay. Now, I want to explain to you.
I think he has like an ongoing issue with Jeremy. He makes fun of Jeremy for investing in Tattooed Chef. This goes back to the conservative value investor that only invests in stocks that are profitable. He pushes an index, and it kind of looked down on the speculative growth stock investors. Overall, like, his portfolio is very responsible. I know he invests, I think, over 90% in an index. And then he takes some of his extra money and just invests in some of these individual stocks.
Why I bought this stock when I did, and where I think the stock's going to go in the future. Okay, not in the short term. I have no freaking idea where it's going to go in the short term. It could go. Oh my god, I have no idea where the stock could go in the near term. But in the long term, I think I'm going to be proven right. Now, as you can see, my cost basis is $190. And I think that's a great price for this behemoth, this mammoth, this cash-generating engine of a company. You may disagree because it's Chinese stock, because it went down, bro. But you can't deny, if you actually look at the business fundamentals, this company is a freaking beast. Now, I know a lot of y'all are going to come back and say, well, Chinese crackdown and the VIE structure, and the best argument of all is, the stock went down, bro. That's why it's trash. Now let's look. Now, looking at this stock chart over the last 5 years, look back, one of the stocks, how much do you think this company has grown? Because stock prices do not reflect the current condition of the company, the stock's down. However, I truly believe in the long run, this stock will reflect its intrinsic value. It's just a matter of time. However, there's always a thing that happens, like, oh my god, profitability, discounted cash flow, stuff like that.
Okay, so Yeah, he's absolutely right. I mean, if you just look at Baba, he's talking about discounted cash flow. I have a free cash flow DCF here that I did. It's just a basic free cash flow DCF. And this is just kind of their growth from 2018 to 2021. Their free cash flow increased 33%, 39%. And I was conservative and I said that they're not going to continue to grow 39%, but maybe 10% over the next 5 years. And with that conservative value, it gives the free cash flow value of $296 per share, currently trading at $86, which is a potential of 242% upside. I understand you just look at the DCF and this is kind of like Charlie Munger, and why wouldn't you invest in it? Look at this revenue growth. 2013, $5 billion, 2021, $109 billion. I mean, that is ridiculous. The only thing, though, is are these numbers accurate? Why were the 5 companies at risk of being delisted? They have what they call the Holding Foreign Companies Accountable Act, and this basically wants to make foreign companies more transparent and make their accounting documents available. So the 5 companies that are at risk for being delisted aren't in compliance with these stocks. Of course, just the whole macro and the China risks that he talks about, it is a factor for some investors. They just rather not touch China stocks. The government can do what they want. They can delist. They can make CEOs disappear for a little while. But this is something else. I mean, this is, if they're not being transparent, why aren't they being transparent? Are they hiding their numbers? Are they exaggerating their numbers? I mean, these numbers are ridiculous, the growth. Charlie Munger, he's a smart investor. So I'm sure he has some insight and he wouldn't just blindly invest in a company like this if he wasn't sure that these numbers were accurate. But I think that's what the risk is. Are these numbers truly accurate? Do they truly reflect what the company is bringing in? He is right when he says Alibaba is a beast of a company, what they offer, and they're only increasing, they're only getting better, especially with their cloud services. They're really bullish on their cloud services and their e-commerce. So there's a lot of upside. And yes, if China doesn't mess with Alibaba and Tencent and allows them to keep doing business as usual and the market doesn't overreact to China, this stock should be trading a lot higher. He's right, but you have to be okay with those types of risks, the risk of the unknown.
I know, crazy. Looking at this, people give me a lot of flack because the stock's down. Not in the freaking slightest. If you put your money into an index, you're basically a global index. You're betting that the world is going to be bigger, the economy's going to be bigger, people are going to be more productive. The world's going to be a better place 30, 40, 50 years from now. If you put your money into an individual company, you're taking on a lot more risk because a company can go bye-bye. Everybody's laughing because the stock's down. It's all the same thing. No, it's not, okay? Let's go look at my fundamental thesis, and then I'm going to tell you where I think the stock's full projected growth rate every year for the Chinese economy. Go 7%, excuse me. The Chinese economy going into 2026 is going to roughly grow at a 5%.
Again, he made the point about investing in an index, a lot less riskier than just choosing a few stocks. And he's right. If you go back historically, the market has never lost, right? It's gone through some crashes, it's gone through some recessions, it's gone through some corrections, but it always recovered. So yeah, if you go by historical, you should bet on the stock market. And he's talking about the macro of China. Everybody knows that China has potential, but there has been some risk, especially with their housing. You saw with Evergrande, kind of exposed them a little bit, but he believes that the upside, like a lot of other people believe, that the China market is still worth investing in.
But let's go look at the United States. Because the United States, apparently our stocks always just go up and up for real GDP growth in the United States. Now, looking at this, real GDP is expected to grow basically 1.8, 1.6% going out to 2030. Do you really think our stocks are going to do well? Or going to crush it out of the water, knock it out of the park, when our economy is growing at a real rate, this is after inflation, of 1.6%? No. Most of the world's growth is going to be in Asia, okay? And what companies do you think stand to benefit from growth in Asia? And yeah, I'm sure American companies are going to grow and benefit from that as well. But what companies do you think are going to benefit the most? Maybe Alibaba? Maybe JD? I don't know. Now, here's Alibaba. I got my $80 into JD, and now I have $916. And the day after I buy it, I did. It's your gut. You want to put a small part of your portfolio in it, just freaking average down, okay? Build your position.
Like I said, he does his theatrics, but it's a good thesis, right? He's telling you that his theory, his thesis for investing in these China stocks versus American stocks is the expected GDP growth China is forecasted to have over 5% versus our 1%. And if it is accurate and this thesis comes through and the GDP growth does grow at that rate, who are the forerunners to benefit from this growth? Alibaba for sure. Alibaba is a beast of a company. I mean, if this company was in the United States, this will be Amazon, no doubt. But the uncertainty in China is what keeps investors out. And he talked about JD, and he's also going to talk about Tencent. And I have a DCF for Tencent too.
But all you clowns laugh. I also bought Tencent. I put $1,000 into that. Tencent crashed.
See, just $1,000. Very responsible, not high risk.
And now, of course, it's crashing. I still think I got a great price on Tencent. I actually bought it in Fidelity, not on Robinhood.
Hey, we look at here my DCF for Tencent, 44.66. I did a free cash flow DCF and a more detailed DCF here where I factored in their revenue and EBITDA forecast, their capital expenditure forecast, their net working capital forecast, depreciation and amortization forecast, tax rate, WACC, terminal value, fair value calculations we have here, and then we get all our calculations and it gives us a fair value of $75. Fair value of $75, and for the free cash flow, I had a DCF value of $58. I took the average of the two, and it gives you a $66 price range, potential price range, which is a 49% upside.
So I can't show you. Did I buy in here, did I? Well, okay, and also look at the buy. Everybody says it's a buy, so it's a buy. But guys, you don't know when these stocks are going to bottom. You do your own analysis, you consider all the risks, and guess what? If you don't want to buy Chinese stocks, you don't have to, okay? There is nothing wrong with doing 100% index funds. Nothing in the slightest. 95% of my portfolio is in index funds. 95%, okay? This is just fun. This is play money for me. Position in any one of these stocks, any individual stock, okay? Okay, you can get your whole freaking world swept out from under you, and you won't see it coming. So keep it to a small part of your portfolio. But yes, I'm still bullish on Chinese stocks, okay? I think there's a lot of fear. I think there's a massive overreaction to fear. I think the sell-off happened today because the U.S. published a list of 5 or 6 Chinese stocks. I don't think I'm going to remember this crap. And I think these stocks are going to be a lot higher, okay? And just think about it. I mean, it's common sense, okay? America is not going to be growing that fast going into the future. Our stock market, I do not understand why our stock market is how it is, okay? I think people are baking in insane assumptions for how much revenue and earnings are going to grow for the United States into the future. When our GDP is growing at 1.6%.
I want to reiterate that he did state that this is less than 5% of his portfolio. 95% is in index. So it's low risk. He said it's play money. And I totally get that. I have the same mentality when it comes to day trading, when it comes to swing trading. Just take a small portion and go in there and day trade. Don't just gamble it. Have a strategy. I have a lot of videos that go over different strategies. But overall, invest your money in the index and take a small portion and invest in a few stocks that you think have potential growth. I think China kind of changed their stance. They had the slogan known as common prosperity. And over the last few years, it's hard to decipher this authoritarian regime and kind of sharply turning leftward and, I don't know, maybe reconnecting to Marxist roots. But I 100%, there's nothing I don't disagree with him on his video, his reaction. It's fun to watch.
I just don't see the stock market going up 10% every year. That's why I like having a global portfolio. So that's my talk. Let it go. And don't worry about it. Because think about it. Let's say 2 years from now, a couple of years. I don't care. I'm in Asia. Not in the United States, etc., etc. I don't think in Europe either. So y'all laugh, whatever. I'm the same as Jeremy. I know. Jeremy preaches 95% of your money in index funds. And, he buys very profitable companies, Yeah, it's the same thing, bro. It's the same thing.
Obviously being sarcastic.
Anyway, y'all have your laughs. I'm not scared to show it. I don't care. Okay? I'm not ashamed at all. Don't care. And that's it. Y'all have a wonderful night. Cheers.
All right, and that was Strongman Finance. Great video, very entertaining to watch. Says invest in an index fund. Totally agree with him. Low risk. He's bullish on China stocks. I rather not invest in China stocks, but I see his point. And one more great point that he made, if you invest in a stock that you totally believe in and you get in and it drops 30, 40, 50%, and you're not worried about it, in 10 years, 20 years, if that stock grew 3, 4, 5, 100%, you're really not going to care about that $20, $30, $40 that you missed in entry. It's well known that the investors that do the best are the ones that don't look at their portfolio. So that was my video. If you enjoyed that, please watch the next one. Thank you for watching. See you on the next video.